Yeah, so the war now is transitioned more into a tightening of the cybersecurity that the banking system wants to have. And so I believe that the next pandemic that we're going to see is, instead of a physical virus, it'll be a digital one and necessitate the next generation of lockdown. And that can change at any given time. NVIDIA, I think that if the war is able to maintain itself, that NVIDIA will continue to rise simply because of the number of people that believe that the war is real and will, in undoubtedly, fight against those who say it isn't. Yeah, so a lot can change there. Oracle, there we covered that. Let's go on to Palantir, which got that big jump over the last little while. That was back, I think, the same around the same time. First week of August. Currently created a whole new high. There is a little bit more to overcome there because this is really that pivot area. So it's in it, and if it can maintain that, great. In the sense that it's going up, not great that they're becoming more valuable, but it's great for it in that the volumes and the capitalization goes up. Tesla actually finding new lows again from all the way back from July 2025. That was the last time we were this low. And we can see the formation of that pivot point throughout history where the price action the price action hung around there a lot. On to the Japanese yen, which we're tracking because the Asian markets are kind of that shot across the bow when it comes to the rest of the world, simply because they're the ones that open first in a day's trading, being the land of the rising sun, as they say. Well, anything I want to say about this?
Is this a 4 hour chart, day chart?
Yeah, this is a 4 hour chart. On the
Okay.
daily chart, we see this, and it's continuing the trend
Uh-huh.
without a doubt. We see actually a few trends, and these trend lines are kind of like that, where we see this as a almost like an inner pivot line to that long-term trend line. That long-term trend line that got formed way back here.
Huh.
I don't know why that's offline though. It's like, there we go. So this trend line is actually going to have um, the most weight,
Mm-hmm.
and that we have these inner trend lines that we can see occur as the pivot points rise, as the highs and the lows form their support. Yeah, I'm gonna take this line out because it's not as important. And then what we have is here in this situation, let's go to the daily chart. We can see an inner trend line formed right here. And now it's below that. So when we look at these patterns, we are, again, looking at them from a technical standpoint. This is not a good sign for this chart in the sense that it will go down it'll go downwards. It'll go bearish. I shouldn't say it's not a good sign. It'll go bearish. This indicator tells us it'll go bearish simply because the price action dipped below this trend line and is now experiencing resistance. Japanese markets overcame their downward trend there. This is again looking like another reversal. At the same time, there is this market structure that is going to provide that support. So this low isn't really, it's kind of a medium low. It's not a super heavy one simply because this became market structure back in May. So going upwards, this is probably due to the investment that was made in the economy. The U.S. actually used their treasuries to buy a bunch of the Japanese currency to give it a little bit of the impression of more demand. Oh, and my mouse might have just died. Just like that. Onto the US 30. Rising prices still. Looks like from hitting that all-time high back on August 5th. Looks like we're finding support. Probably going to settle down either at the high from July 27th, or sorry, July 7th, or possibly this more prominent high around 52,900.
Can I ask you a more generic question?
Mm-hmm.
Looking at this, and you may be one that can't really be answered succinctly, but I look at this chart and the last chart, and sometimes, when you have the lines in there, it's like, oh yeah, that makes sense. But then if I imagine the chart without the lines, it's like, would I know how to draw? I mean, of course I don't, because I'm not versed in this, but I'm starting to wonder, like, how you start to learn to look at a chart and go, oh, here's the support line, it looks like the lower line is based off of whatever the last low was.
Yep.
Or
yeah, that's right.
There was a low before that. So how do you know to put that there instead of further?
Great question. Let's go to a fresh chart where there are no lines, because
Okay.
that'll be a good learning experience. I'm gonna just let's go and grab the S&P 500. Yeah, we'll use this one. Okay. So this is not a bar chart. This is a line chart. The principle is the same. It's just showing us the close of that time frame. And we don't go down to the 4-hour chart on this one. It's only daily.
Okay.
So to find a trend, I'm going to start off with that's 2020. Let's use something where we don't have so much volatility. Here's a good spot. So this is the low. We can agree that, while it was lower beforehand, this is a pretty prominent low here in this timeline.
And as part of it, because there's 2 or 3 of them?
Yeah, so we have it coming up to these highs, and then we form a low, and then we formed another low, but then we can see that it starts to go up.
Yeah.
So that is where we're going to start with this low here. And to draw a trend line, you'll take the tool like this one. This creates a line in any direction from a starting point, and you extend it out in time to across. So this is a nice big area, and what you do is you just simply bring your mouse up until that line touches price action, and there it is.
What do you mean price action? Like
the line itself. The line represents the price action, and so this line is just that straight edge.
Yeah.
And we're just gonna elevate that straight edge until that straight edge right there, or whenever we touch the price action. And then that creates, oh look, there's the trend line. So now we can plot out even further and look at how that trend line gets interacted. In fact, we have it above that trend line this whole time. And then it dips below and then continues to rise, but on the underside of that trend line.
Yeah.
And then it makes the big drop. This was December 2018. And the same thing applies for the other direction. So let's say, for instance, let's find a portion where there's a large downtrend. This is about as big as we get. So the same thing applies here. We start off with the trend line tool. We start at the top, extend it out in time, forward in time, and then bring it down. And we can see there's our trend line. Now, when it comes to stocks, it's negligible, but we are typically looking for about, right? So here we have that, but this next low here, or this next high that comes down lower, it's pretty much right in line. And so that's where we kind of like, okay, yeah, it's close enough. If it was
like approximately,
yeah, we can use approximates.
Right on. Okay.
Yeah, and especially when we can see that the pattern holds.
Right.
Right? This is really close, but
yeah,
the pattern held here.
Yeah.
And then we look and we see, oh, look at that.
Huh.
It broke out above it, and then it used that trend line as support.
Wow.
To go back up. And then here we see, okay, well, we got another trend line starting at this low, and it goes this way. And we can see it dipped below, and then it used its support later on.
So again, you're not, if you're starting with horizontal, sometimes you stop right at the first price action, but sometimes you don't. Like this time you're not. Like you didn't stop right at that. Like it's interesting if you stop at that lower one.
This one here?
Yeah. What does that? I mean, if you go right to the bottom tip of it, yeah, then it looks like it also hits that other bottom that's next.
Yep.
So how would you decide between doing this line or doing the one that you did where it went up more?
Oh, yeah, good point. Good point. This is the proper way to do it. What I was doing was I was looking at the inner trend line right here. And so there can be inner and outer trend lines.
How do you define an inner? Maybe I don't understand the definition of an inner trend line.
Well, with this here, this is the low, and you are correct. This is the proper way to identify that trend. Because the higher time frames, the more shallow the slope has more weight to the price action. What I drew there was finding more touch points. So really what I drew was more of a pivot point instead of a trend line.
Okay.
Yeah, thanks for pointing that out.
Because where things are, they just keep bouncing or coming back to.
Yeah. Here, there's only 3 touch points. Whereas with here, we can see there's lots of pivot. 1, 2, 3, 4, 5, 6, 7, 8, right? So and that's where my eye is drawn to. So that's why I do that. But in reality, you are correct. Your trend line that you identified, good job, by the way. That is the trend line.
And then if we
we're strayed. We're very much strayed from that. And that's why I keep talking about the market always corrects herself. It will always come back to retest lines, especially when it's strayed so far from it. And right now that drop is 22%. Oh, what do you know? That's the average. Let's see what it did here. Oh, this one was 35%. Here's where we had I forgot to. There's something else. I use what's called a logarithmic chart, so it is not to scale. And the reason I do that is because we're primarily watching the digital markets, and they are going to be going exponential, and so the logarithmic approach very much helps. Maybe it's not logarithmic because I can't change it here. Oh, there it is.
So does
Regular.
logarithmic accentuate the changes?
Yes. What it does is the higher the price, the more condensed the units.
Hmm.
Yeah. So for instance, if we go to Bitcoin, like the
Mm-hmm.
Bitcoin chart is almost impossible to work with like this because just the distance between the lows of 2015
Mm-hmm.
and the highs of October 2025. This here is, in fact, quite difficult to work with. And so when we turn it to logarithmic, we can actually chart things easier simply because that exponential nature
Mm-hmm.
gets muted.
Oh, yeah.
Right now it's a little bit easier to work with,
Uh-huh.
especially when you're looking to, okay, well, where is it headed next? If I have it on the linear chart,
Mm-hmm.
right, where is it going next? Well, I have to go like this to go see, and I don't know what that trend line's doing there, right? But we can already see, like, here's the low, stretch it across, and we can see, yeah, we have two trend lines here, and I don't know how valid they are simply because this is the reset that we're in. So there's that one, and if I zoom in, oops. And then if I zoom in, we can see there's the next
I
where
don't
we
see
see
where
it.
where's the first trend line?
That's this one here.
Oh, the just the straight across?
Yep.
Okay.
This
Oh,
is
it
the
is
trend
straight across. Okay.
only because when I extend that out, let's grab it here. Oops. So there's the low, and then we see the next low is already right here.
Yeah.
Right? So we call that the outer trend line because it's
Okay.
the outside of, and then we experience another trend line starting from that point because that's where it met.
Uh-huh.
So then we start another trend
Oh.
line and we have another, and it fans out like this. And then currently we just formed another trend line right here.
And how do you know to go? What are you basing on your last point on that third trend line? What uh
It's right there.
oh, okay. I was looking at the end, the far end. Okay.
Oh yeah,
I see
yeah.
what
That
you're
was just a coincidence over here.
doing. Okay.
That's where it's just curious. It's like, wow, the
Yeah.
low here, that was from November 2022.
Mm-hmm.
And then we have another low where it meets it right there. That's September 2023. And isn't it interesting that after all that hubble blew, it comes right back and meets that same damn trend line from 2 or 3 years ago?
Huh. I haven't been tracking Bitcoin, even though I listened to you and stuff. I haven't like registered because I wasn't really thinking, but I didn't realize it was as low as it is now. I guess I thought it. When was the high point on that?
That was October 2025.
Okay, so I really just haven't paid attention.
Oh, well, no problem. I mean,
I mean, I've noticed,
it's a
you're
wide world.
saying it's going up and down or whatever, but somehow I haven't. What haven't I done? I don't know. I just haven't looked at it and gone, oh, like people that there's probably a fair amount of people that are upset right now.
Oh, yes.
That's what I
Yes.
haven't tuned in. You know what I mean? Like there was a couple months in 2020 that I did as best I could to educate myself about Bitcoin and thought I was going to get all into it. And I ended up reading a lot of Reddit stuff and went, I am not getting into this. This is like a group think mind. whichever way you went, either trashing it or, this is the end of all, this is the best of all possible.
Mm-hmm.
So I just, I bought a, what do you call it, like a postal thing to have a hard wallet sent to. So I went that far, and
Yep.
then I don't know what happened, and I just went, I'm not doing this at this point. Where was it in 2020?
2020, it was in this area. Oh, no, that's 2022. There. That's coming up to the end of 2020.
Huh. Look at the ride I missed. The roller coaster, up and down, because I
Mhm.
would have known to get in or out, or I don't know. I think it was the technical aspects that daunted me, actually.
Oh, yeah, in
You
2020,
know,
it was still
the
not.
hacking, yeah, and I don't know that I really updated my understanding from that time. Like, I don't know if it's more risky now, more hackable, more, I just kind of went. I realized my partner, who is the, more technically savvy, was not going to get on board with this, and so I was kind of on my own, and I've taken on more self responsibility with tech since then. Not that I'm any great whatever, but there's more things that I go, I can figure this out, like.
Mhm.
So anyway, a little detour there, but yeah, so it's it's lower than I've thought was thinking it was.
Well, and again, when we've been looking at the charts, we haven't been looking at it in this ratio, right? This is linear,
Oh,
right?
okay.
So when we've been looking at it, we've been seeing
Okay.
this, right? And
Yeah.
it doesn't look the same at all.
Yeah. Okay.
And it's
That's
simply because as the price goes up, this condenses. The price action condenses.
Is it the same at the extreme end of going down, or is it just going up that it's condensing?
Yeah, only as it goes up. As it goes down, the numbers get further and further apart. That way, see, that's the other thing too, is that when I'm scrolling like this, it's like, look at this. This went from 1 cent to $34.
Jeez. In how much time?
245 days.
Holy shit.
Yeah, so 305%. That's the same rate of inflation that Venezuela got,
Oh,
right? So that's 2010 going into 2011. But that jump, that 300,000%, was only $30. So if we go to today and we measure out $30, we don't want it to take up the whole friggin' screen. $30, that could happen from one trade to the next. Literally, one tick can
right.
jump $30. So we need the lines to get closer together as we get higher up.
So is the condensing at the top based on the original price of, like, is it somehow logarithmically coming off of the original price, or is it coming off of the most recent low that the trend is based on? Does that question make sense? Even, like, I'm just like, where
I'm
does
sure
the
I'm sure it makes sense to you, and I want to learn where are you at, because explain more. That's what I should say. Explain
well,
more.
like,
Oh, Carrie's here.
logarithmic, does it start from zero? Does it start from the 1 cent? Does it start from this trend line
Ah,
that we have? Does that make sense? Is
yep,
there a point where the logarithm shifts because, like, it's very different now? It's nowhere near 1 cent.
right. This
Like,
is right
the
here. The
logarithm,
chart
yeah.
the chart does start at zero, and then we see that look, between 0 and 1 cent is this much.
What?
because we're looking at it from the perspective of the price action, right? So the price action starts at 0 and it goes up to, what is this one here? That's $32. So this here needs to be represented on the screen. If like look at how insignificant this is if I zoom out. Right? I shouldn't say that. It does look significant, but it's
Right.
because I'm logarithmic again. Like, look at this. This is 0 here, right? And where we are is 64,000. But then this level here, that's 2.8 million, right? We're obviously not there. But I need to see that much price action to see where are we going next. If I have it at regular, look at how insignificant that $32 now is. That's $32 difference between here, right? This is 0 and $30. We don't actually see the line. We barely see the line move
Right.
until November 2013, where it goes up to $861. So it just makes the chart unmanageable to view this price action.
Yeah, I guess what I'm trying to figure out is what you have to do in your brain to understand the logarithmic, like I see how it makes it clearer, but like how you account for that, I don't know. Just like it seems like it's something that you're oriented to. I think I've just assumed all these charts were linear.
Right. It is probably like I don't think about it.
No, I'm sure you
I don't
don't,
reconcile it because it's, to me, I'm looking at the trend lines and pivot points, which are a far greater source of truth to me than the scale of how the price action is represented.
So I think that answers in part the question of how do you orient. It's like you're not really interested in the scale I mean, you, like you say, that way you wouldn't be able to figure out the trends, and that's what you're trying to do, is figure out where is this going.
Right.
Like the fact that, I'm just going to say this as a statement, you can tell me if it's, because I don't know how to say this as a question. The fact that you can't see between 0 and 34, which is a huge thing, the fact that you can't see that on the scale, and that's because how far it's gone has made that shrink, right? Like,
oh yeah, because that
it would have been visible in the beginning.
Oh, and it is. Like if I go like this, you can see how it like jumps up in order to fit the screen.
Oh.
Right? Because it has to fill the screen, otherwise it's impossible to read. But the problem is when I'm looking at the higher time frame, like I can't even draw trend lines in here.
Right.
Not that I need to.
Right, because it's a long time ago.
In order for me to look at that longer time frame, I'm not so concerned about seeing it representative, like linearly. And the reason why is because when I'm executing or when I'm making measurements, I'm looking at levels. I'm not looking at prices.
That's the shift.
Yeah. And typically, I don't even pay attention to the price at all. I'm actually looking at percentages.
Right.
That's what I'm more interested, because this here, 28%, that's something that we can go back to the beginning and see, Here's this drop where we went down 94% in the same time frame. Right? So I'm always looking at the percentages of these price fluctuations.
Okay.
More so than the price point.
Yeah.
Because this is technically, it's not that important.
Right.
It's a data point, but we don't sit there and be like, I got SpaceX at $130. Right? But what was your gain, what was your loss. It's all about profit and loss, and that is measured. Yes, you can measure it in dollar values, but when it comes to performance, they measure it in percentages. Hello, Maureen.
Right, because it doesn't matter if you go from 1 cent to 34, or you go from whatever that percentage would be now. It doesn't matter the price point. It matters the price point is what it takes to get in or out.
Yep.
But
The
the
other thing that I
percentage,
would consider is that what is the value of that currency that I used to purchase that at that time in relationship to what it is now?
Mm-hmm.
right, that's a biggie.
Makes
Which,
you a
and
different player. I'm sorry, Paul.
no. Go ahead, Maureen. Say it.
No, it just makes you a different type of player.
Right.
You're like a step back. You're like removed back a bit.
It's the same principle we've been tracking with the price of the market compared to the price of this index in compared to precious metals. It's the same type of practice. I'm very much, it's like if it was 55,000, that's the almost 55,000 the high.
Is what are we on? Gold. Oh,
This is a US 30.
US 30. Okay.
Yeah. So on the US 30, it could be 55,000, right? But that doesn't tell us how much growth there was from here. You know, like, oh, there's the price. I mean, yeah, we get the two price points, right? The low and the high. And then we calculate what's the difference between those two. But this 21%, it doesn't matter if it was $20,000 or $120,000.
Right.
It's only 21% from the high to the low.
Right.
And
So
that's
whatever
where we
anybody put in, they would get 20% increase on what they did, whether they put in 100,000 or they put in $10. It's like, oh, it was a 20. Now I'm not even saying the right thing, because that's the amount of money, the price that they got it at. It wouldn't matter. How much they
Right.
did would matter.
Yep. Yep. When you're working for a prop firm, this is what we call proprietary funds, and they call for short they just call them prop firms. If you're trading for a prop firm, you will be fired if you are not making 6% per year. Period. And so it doesn't matter what the prices are. It doesn't matter
Right.
what the volatility is. It doesn't matter whether it's bullish or bearish. If you're not making 6%, sorry, you're off the team. And that's the low end, right? There are some prop firms where they'll say no, 18%, which is insane. 18% per year on a prop firm, that is very, very aggressive. Yeah, it is. It's a different way of looking at it, and I prefer it simply because when we're looking at the volatility, when things become more volatile, I need to be able to have that room to read the chart. If I'm just working with, like, let's look at the Japanese yen against the US dollar. This chart here, right now, I think it's, oh, I'm back to regular again. So right now, I'm back to regular. Well, we don't see like linear yet.
Okay.
But we don't see there being volatility like we saw with the other charts. Why? Because these are foreign currencies. If they are fluctuating 2% per month, that's volatile. So because the volatility is in such smaller percentages, you can use a normal scale or a linear chart.
Mm-hmm.
But when you're in volatile markets, it's a sign of not knowing what you're doing if you're not using a logarithmic chart.
But do you still, when you're looking at this, do you still use the logarithmic chart when you're talking to us about it, so that they're all the charts are kind of going off the same?
Yeah. And here's why. Because I can. When I go to Bitcoin, right? Here's logarithmic, and we can plot out a lot of these trend lines, even though, you know, this price action here was only $30. And we see $30 occur from 1 second to the next today because the
Right.
volume is just so much bigger.
Right.
$30 today is not 300%, 300,000% difference.
Right.
Now it's a very tiny, tiny difference. If I switch this to regular, we can see just how, come on. When I go to regular, we just see how vastly different the chart looks. Like it's not even compare. You could be like, well, that's a different chart. No, it's just regular now. If I do the same thing to the USD JPY, right? This is regular.
Mm-hmm.
And we see that represented, that price action is represented. But now I'm going to go and make it a logarithmic. Oh, it's not like a new chart. It just shifted a little bit.
Can you do that again?
Yep, I'll go back to regular.
Boy, it's really not that different.
No, and
That's
it's because it's a foreign currency, so the
Okay.
fluctuation, the volatility isn't there.
Mm-hmm.
It's a
Like-
change of perspective over time.
Yes.
Is
Yeah.
all it is.
Going back to logarithmic, it just makes the higher numbers a little closer together. That's it. Only because there just isn't that much of a fluctuation.
Yeah.
When you have a chart like Bitcoin, the fluctuation is just so grand that this, you know, the condensation of the price action up here graphically doesn't really mean much because we have to zoom in to look at those levels. And now we can see that volatility without having to change the scale of the chart.
I immediately felt more grounded the minute we went to that other perspective, the logarithmic.
Right.
It felt more grounded and less lost.
Yeah.
I feel lost sometimes when I look at the different charts, like, oh my God, you know, this one, it's like standing on one foot or something, you know?
I'm going to update this price right here because this is a new low and it's time. This is comparing the US, this is Bitcoin USD. So the price of Bitcoin in dollars, but this is on the Bitcoin gold chart. So another dimension to look at it, right? Another perspective. So right now, Bitcoin
So like you're so it's comparing Bitcoin and the dollar and gold? No.
No, I'm putting the gold. I'm putting up the Bitcoin prices. The price action is measuring the price of Bitcoin in ounces of gold.
Okay. And then you're putting in what? You're putting in
I have overlaid
the
the
Bitcoin prices.
prices of Bitcoin. And this is always interesting to me because if we go back, like this is August 2021, at the end of the last big run where people were making money hand over fist. This was 2021. And then that was 37 ounces, but it was only $69,000 for one Bitcoin, but 37 ounces. We go forward in time and we can see that the price action brought us back up to that high. You know, it was 37 ounces again, but now it's $108,000 US. So even though it's still the same amount of gold to get the Bitcoin, gold is just simply more valuable now. Right? Because it's, or rather the
dollar is less. The dollar
right,
is
the Bitcoin was, I say gold, and the digital gold was
Right.
more valuable.
right. Right.
And then it did it again, and it didn't even go as high. That's a big distinction. This is not higher, but it went higher in dollars. It was less in gold, but higher in dollars. It's just, there's nothing really to report on it. It's not like, mind-warping news or anything. It's just important to practice looking at these prices from another perspective. We are at this low here. Well, this low coincides with, oh, you know what? Let's check the date. February 23rd. Well, February 23rd. Oh, I'm on the, let's go to the daily. That's gold silver ratio. Where's Bitcoin? And there it is. So this was February 24th was the low. Let's go to the price on February 24th. Well, that's June. March. Feb 24. Right there. It was 62,673. So 62,675 will go. 62,675. So, interestingly, remember, Bitcoin was 37 ounces of gold in October 2021, and it was 69,000. Today, and I say today, February, it was at another low, and it was down in gold. It was actually cheaper. So if you had gold, you could have exchanged your gold for Bitcoin and made 66%, right? Simply because you are now holding 66% more Bitcoin than at the beginning. Again, that's all hypothetical, but that's another way to think. The price is down, but in gold, but it's almost the same in dollars.
It almost feels like to me I need apples and oranges here.
Yep. And then at different price, rather at different timestamps, right? Because it's like the apples and the oranges compare to each other in 2021 differently than they do today. It's quite the it's a warp. It's a mind warp. I'm gonna just grab this one here because it'll be interesting. This was November 21st. Let's go Bitcoin. November 21st. What was it? November 21st. What year? 2022. So November 21st. Right there. 15.6. Yeah. It's just fun to look at this way. I just want to bring our attention. Audrey Lynn and I chatted about this the other day. How oil prices here, this is going into March, and then on April 20th, oil prices dropped from $18 to 1 cent in a day. And the reason why? It's because oil futures were in the negative, meaning that if people had the contracts for oil, they had the contracts in their hand, and instead of selling them because they were going down in value so badly. What they did was that they were paying people to take the stock from them. So oil prices reached 1 cent that day. 1 cent per barrel. This is actually, you know what, now that I think about it, this is probably where it would be good to bring up the linear chart. Just because, like, that just is an absurd, like, you can't work with that. There. Now that's a zero. Or, well, what was that price? 1 cent. Now, oil prices rising again. Can now see the estimated portfolio growth of the Trump family as this war has basically been flip-flopped the whole time. You know, that's crazy. They talk about how Iran has nuclear powers when it was over a year ago. Trump said that everything was good. Iran didn't have any nuclear powers because they negotiated it out of them. Now they're a threat again. Silver prices, look at that, coming up to that trend line. Showing a little bit of resistance. We'll see what happens here. I would expect, like this low here, it did not go lower than this one. So high, low, high, and then a lower that did go lower than here, but it's like this is far more of a market structure simply because we can see that pivot point from over here. So it's still, this low is higher than the previous low. And if we stay above that trend line, I expect there to be a retest. So technically, actually, if I could make a prediction, I will go ahead and just draw it out. I think we'll see something like this. It'll go up, find some resistance, and retest the line before we create another high. And maybe not. The market is always right. Gold prices, though, we are definitely now above a previous point of resistance, which is a good sign. We tested this long-term trend line. This trend line was tested all the way back from October 2023. Let's go to the daily chart. So that is a very strong test where when we zoom in on that, we can see it was trying, almost like the bears were wanting this price to go below that trend line. But we jumped back up above the trend line. And even today, when we zoom in on that 4-hour chart, we can see that we have a very clear new high that's above that pivot point. And this is a strong support.
So we've today visited how to do the trend lines, but what is that thick band below? What is that? Is that what you call support? No, that's what the thick band that's going along the bottoms. What
Yep.
is that called?
Those are what I call pivot points.
Okay.
And pivot points typically associate where, well, by definition, pivot points are where the price action seems to reverse. It's
Okay.
like it was going one direction and then it switched direction. And wherever that occurs, it is a point where we know that the volume was equal. Both bulls and bears, they had a fight and the other one won.
Okay.
Wherever those points occur, they are at price points, usually percentages, that are conducive to investment. And it just becomes kind of like a self-fulfilling prophecy. We're going to experience the bulls and the bears having a common ground at a common price point.
Okay.
So I mark them. I see them with my eye without them. Like, I'll just take this away here for a second. I see that support line. And I mean, it's called support here because we have been staying above it.
Mm-hmm.
But it's called resistance here because we've been staying below it. So they're called pivot points, and pivot points either provide support or
Okay.
resistance. Gold ratio now at 66 ounces of silver. Ethereum, sideways market ever since we came back up above that trend line from the all-time high. We are also on the higher time frame. We have a long-term trend line that started in June 2022, and that got tested hard right here. We can even see how it dipped below and then went above that trend line right here. So it dipped below the trend line and actually had enough strength to get back above it. That was a positive indicator for the asset. Coming back down again, it did not beat out the previous low. And so that seems to be providing it with the support because now we're creating higher highs. Again, though, on the 4-hour chart, we can see that since it broke out above that trend line, we've been pretty much wishy-washy the whole time. The bulls and the bears are what we call this as an undecided market. Sometimes I represent this through boxes like this, where it's like, yeah, that's a consolidation zone, we call it. Because the price, it doesn't decide anywhere, it just goes sideways. Total market capitalization, also very much sideways since June, July. Market dominance on Bitcoin actually got a little bit of a surge here today.
Can I ask back on that last one? I keep asking questions and then I realize I'm muted. Sorry, so my timing's off a little bit.
No
so
problem.
USD 30 is the top 30.
Mm-hmm.
The S&P 500 is the top 500, and then this one is literally just everything that's on the stock exchange? Total?
Like it. This is an index of the market capitalization of all Bitcoin, or all of the cryptocurrencies, minus Bitcoin and Ethereum.
Okay, so it's quite different. It's not.
Yeah.
Okay.
And the reason they do that is because if we go and look at coin market cap, we can see that, Bitcoin and Ethereum are right at the very top of this chart.
Mm-hmm.
And Bitcoin, the market capitalization is $1.28 trillion. And then the next one, Ethereum, is at 230 billion. So, basically almost 1/6, a little bit more than 1/6. And then the next one in line goes all the way down, to 182. And that's Tether, which isn't even a cryptocurrency.
Right.
I mean, it's a cryptocurrency, but it's the dollar, right? People are going to tether to this to prevent the volatility from taking them out. So that's a really high one. And then the next one after that is 80 billion. And that is a exchange coin from Binance. So when we're looking at the coin market capitalization, it's fine to see, okay, well, the coin market cap shows that we have $2.16 trillion But over half of that is all Bitcoin right now. And that is what we're looking at with this chart.
So total is
Is-
everything but Bitcoin, or everything but Bitcoin and Ethereum?
Everything but Bitcoin and Ethereum. And
Okay.
it's called total 3 because total 1 is all of them. Total 2 is taking away Bitcoin.
Okay.
Total 3 is taking away Bitcoin and Ethereum simply because I'm watching the alt market. The
Right.
altcoin market is where we've diversified most of. It's like, is it a diversification? Well, it's a diversification in digital assets.
I wasn't here for the beginning of the call, and you might have discussed this, but I have seen several YouTubes. There's a presence on YouTube of, trying to sell gold and not being able to sell gold and getting it, 68%, of what a spot price is if you try to sell it, and then the push for tokenized gold. I think I sent that to you. I'm not sure if I sent it to you or not. I know I had that question for you, and I wanted to ask you if we have time, or we don't have to do it today, but it's there in my mind. Like, okay, what are your thoughts?
Tokenizing gold, like digital tokenizing. Oh, you're muted.
Because I didn't want to engage the YouTube, because then then you're going to get hundreds of YouTubes from that channel. But it was about decentralization. Let me see if it's on I have it kind of waiting. Decentralization Masters or something. I should probably, if I send that to you, I don't know if is that something you'd be interested in exploring, or what are your thoughts?
Yeah,
Maybe just-
absolutely. In fact, this is something that I'm very, very much excited about. I want to see more and more communities tokenize their precious metals. Absolutely. I'm just going to bring up a new fresh chalkboard here because, oh, wait a minute. Let's check to make sure that my chalkboard is going to work today. If not, then I can still explain this out. Yeah, no, it's not working today. Okay, so I gotta reset my computer. It's been a couple weeks. So when it comes to the tokenization of precious metals, the importance is first, I believe the importance is to create a trust, first and foremost. Because with the trust, you can secure those assets behind terms and conditions that have more force and effect than your local jurisdictions. And that's key. You want the law to be observed in that trust. And so when you place those assets in that trust, now the government has no, they may have the power to rob you, but now that is a direct violation of international banking law. And there would be consequences to that.
Could we hash that?
Hash that. Sure.
Hash that. Those wordings that wording is so good, Paul.
Thank you.
It feels very concise and just exactly, where I can put it on my forehead. Maybe it'll sink in, like a tattoo or something, the ink. Anyway,
Yeah.
go ahead.
So once you have that trust and you place that silver and that gold in that trust, and it doesn't matter where the location is, and I'll give you a case in point. Sojourners is a small organization here in Western Canada. I think they're based out of Saskatchewan, and they have a treasury, but that treasury is all in a trust. In fact, the trust is so secure that the members hold the silver. They don't send it away. Yeah, they retain custody of their silver, and it's under a contract. It's held in trust. That silver is used to back contracts. And the contracts are literally bills of sale written on carbon copy receipts. Good old fashioned. You're getting the book with the carbon thing, and you press hard. Third copy is yours. Thank you very much, sir.
Know it well.
Yep.
Used it a long time.
Oh, yeah.
Yeah.
I use it a lot as well, but in a different capacity. I was using it for inventory. When I was tracking a warehouse, we used those because everything had to be written down, and then office had to have a copy, the trucker had to have a copy, and the customer had to have a copy. That is what we call a bill of lading. Bills of lading are currency. You issue
LA
currency.
Lating? Lating?
Oh, no, lading. Lading.
Okay.
Yep.
I just want to do
That-
a time check. I don't want to stop this conversation. And I know that we told Judy we would meet her on a different. I just realized I was thinking she would come to this channel, but we said we'd meet her on a different channel. And I don't
I
know
can
what
text
time.
her. I could text her and we could meet on this one if you want.
Sure.
Well, it might be cleaner.
Oh, okay.
You know what I mean? Like we're on a specific focus or whatever, but I can't remember if she had a tight window, and I don't remember what time we told her. We just said after market analysis, so I don't know.
I did say 11:30 Pacific Standard.
Oh,
And
okay. So
She's driving right now. She was in the call this morning and she was driving.
that's in 20 more minutes.
Need a second.
Yeah.
Okay,
Well, 25. No, yeah.
20.
10,
Okay, so
30.
we're still probably on track. Okay, so sorry for the interruption.
Yeah, no problem. So yeah, that's how Sojourners has established their treasury, and they are issuing those bills of lading to track the trading of the commerce that goes on within that organization, within that PMA. Now, the best thing about this is because the precious metals are held in trust, if there's an item and it's not worth 1 ounce of silver, on the bill of lading, they write the fraction. So they don't have to go and split the coins. They don't have to pay incredibly, like sometimes 200% premiums on like, half ounce and quarter ounce coins. They can maintain that they have with spot prices on the troy ounce, but now the currency is 100% backed by the treasury funds in that precious metal. So that is one way to do it.
Can I recap that to see if I understood it?
Yeah.
So they've got a certain amount of silver that's in a trust, and they're tokenizing it, which I don't entirely know what that means, but I'm just going to go with this. They are able to trade that silver back and forth without touching the silver and without dealing with the premium prices. So it's like whatever the spot price is, that's the value of what the spot price that day, that's the value of what so the value of it changes, but they don't have to also add on a premium every time they make an exchange or something, every time they buy something.
If it's a
They are
fraction of the 1 ounce, right? If it's a fraction of 1 ounce.
At the point of the sale is where the consent is signified by the transference of that equity. And so, therefore, at the point of sale, they can choose, last week it was 1/10 of an ounce. Yeah, but we have inflation and silver went up.
Mm-hmm.
So now it's still 1/10 of an ounce. Or maybe the price action was worked against, like it worked against the people that were holding, and so now it's 2/10 of an ounce. Oh, but it's more money. Well, no, because the price just changed, and we're adjusting the price of ounces to be approximately what it was last week. or the week before. So every time there's a transaction, they are calculating the value that is needed to be exchanged, which is typically going to follow the dollars required. You know, if things get more expensive, the price is going to be going up, but it might be going down in silver.
Mm-hmm. Wow.
Paul, just a question about opening this email, because why am I having caution regarding that? Is this some, I guess I just don't want to be flooded, or I don't know whether this is a legitimate thing or not, because, you know, it was on YouTube and an ad on YouTube, you know. But he was saying the ease of transport and of course, the ease of like giving it to somebody so that you don't have to physically, or sending them money. Say he was sending his daughter money who lived across the US. Plus, I guess the possible jeopardy of being in a spot and when everybody else is, and then people that will buy back silver will take advantage of that and give you a percentage of the spot price. And if you have digital gold, I guess he's saying that, or tokenized gold. But I didn't link it to what you were saying before about like tokenizing it. And like in the trust, it's token, or that piece of paper, it becomes tokenized because it's handwritten. Is that
Well,
correct?
it's just like the tea and the pierogies. They were both tokenized to themselves at the point of the sale, right? Oh, the tea is worth just the bag of tea is worth that bag of pierogies, and it is upon the consent of that exchange that the equity is put into circulation. That's the creation of money.
What is
So
the
yeah,
what is the difference between tokenizing it, which sounds like a good thing, you're for it, and paper gold, which is not a good thing? You know, like people getting, I don't know, like there's these different ads that come on YouTube, or people that I even respect, but then it's like they'll start talking about how important it is to have gold, but then what they're actually promoting is an IRA in gold, or you don't actually have the gold. You've got the paper gold, which we know is being sold many times over. So is tokenizing not doing that? It's not fractionalizing it?
if you were to fractionalize it in the process, yeah, that would be very bad. But that's why you do it with a trust, because you can't fractionalize an asset that's in a trust. That is highly unlawful. That's a breach of trust. You're right.
Why is
To
that
to-
not okay in
to-
the trust and it's okay in the financial system? Like, why is it that they can fractionalize? Like, why isn't that illegal for them to fractionalize outside of a trust?
Because of consent. People see, oh, I can buy this future price. Oh, it's amazing. I want that. That's all it's needed for that contract to be binding. And the fractionalization is incentivized by banking systems that are instituted specifically to deplete or to leech the purchasing power of the currency. So what they're doing is unlawful from a trust perspective,
Mm-hmm.
but you're not dealing with trusts there. You have an exchange, and the contract and the exchange has what's called an ETF, an exchange traded fund.
Mm.
And those exchange traded funds are what you're buying. You're not actually buying the gold and silver,
Mm-hmm.
right? Whereas with the sojourners, those bills of lading are identifying denominations of physical gold and silver that is in that trust. So if you start creating bills of lading that are not rooted in that, that's a breach of trust.
Okay.
It's not a breach of trust. Like, to play the futures, I mean, it's like going to the casino. It's like the
Mhm.
casino is rigged to play for the house to win, right?
Right.
And people go there and consensually give their money to that institution. And it's the same thing with the banking, the financial instruments that they sell at those exchanges.
Does it mean that someone that has a token could go and trade that token for that amount of gold in the trust? Or that's more of a bank thing? Not that the banks do that, but we have this idea like, oh, I've got $500 in the bank, and if I want $500 in the bank, I go to the bank and I can get it out. But if everybody does that, there's not enough money for everybody to do that.
Yeah,
So-
and that's why that community is only really attracting people who recognize that it is not advisable to take the equity out of the community, because they know that, like, the dollar is not going to go up. It is
Right.
not going to increase in value. Every single day you're holding a dollar, it actually drops in value. And whereas you know that you and your community have the ability to trade on a currency, because that's what the bills of lading are, it's just currency, that you know that what it is that you're interacting with is not only backed by the assets that are being traded, right? So whether it's milk or eggs or vegetables or whatever is being brought forward through that food distribution, the goods are what back the transaction. The metal is what backs the currency. So it's like that bill of lading is, and yes, if you wanted to go and take your dollars or take that bill, right, and say, I want the dollars for that metal, you could do that, but not advisable.
You would take the dollars, you wouldn't take the actual metal. The metal stays in
Correct.
the trust. So
Well,
what you're really buying into is you're buying into the community ability to exchange.
yes.
What? And so you would just put money in that you didn't need.
It's
That's
going
right.
off, it's pressurized or something.
Maureen, I'm just going to mute you.
Oh, I'm sorry. Ron came home and
Oh, and I muted Zoa instead. Sorry. There we go.
You would participate in it to the degree that you knew that you could do that, like that you wouldn't be taking it back out because you're using it to exchange for goods in the community. And then I guess you'd also be wanting to have goods that you are selling for that. Like, is that? Just try it. I don't know that I need to understand this. I probably don't, but it's very interesting because it seems like it's a model for a lot of things we could do, right? Like,
It actually frustrates me that this isn't something that we do automatically. That we subscribe to the idea that someone else should govern the value of our means of exchange. That we should pass up that responsibility. Oh, wait, no, let's not worry about backing this with anything of value. When there is an option, like it would be a totally different situation if there were no other options. Oh, well, then you're in abject slavery, which isn't good at all, and and you should have a revolt at that point, right? But the fact is that so many people don't revolt, and so we are like surrounded by all kinds of other people who want to pass the responsibility of the value of their life force energy to their adversary.
what's not to like?
I don't think it's
And
just
then,
passing our life force, the value of our life force energy to our adversary. I think we pass the value of our life force energy to anybody that we allow to benefit from our life force energy without reciprocity.
Mm.
When we give away our services, when we give away ourselves, I think that's acting just like the adversary against ourselves.
Yeah, devaluing ourselves.
There's some distinction between that and freely giving that we don't need to go into right now, but I'm just like, there's a way that freely giving is not devaluing yourself, but it is also a way that your needs are already met or are being met somehow, or, you know, just, or there's like things that, like you've talked about, Paul, that there's aspects that you give away freely because that's part of how you seed the world, is what I would say. It's like, this is what I want to put into the world for anybody that's able to resonate so that they can grow in this direction. But if you want this and that, if you want one-on-one, if you want my consult, if you want that, then it's like, okay, that is not just, like, it wouldn't make sense for you to do that. It would be
Right.
a theft or a devaluing that Audrylin just said.
Oh no, it would be altruism.
Mm-hmm.
If
Mm-hmm.
I have the means and you need, then altruism says, I give to you, whether my bucket is full or empty. Makes me look like a hero.
Yep. Altruism is not a virtue.
But we are encouraged to do that because, well, so-and-so needs, and you have. Just like the immigrant crisis. Like a year ago, I was visiting with a friend, and he was all wound up that these immigrant children were here in the country, and they didn't ask for the situation, and it's our responsibility to house and feed and educate them. And I asked him why. I said, well, wait a minute, I didn't consent to that. So why do I have to pay for it? And he couldn't answer me.
Well, and the answer that is given and the program perpetuates is that it's your responsibility. You have to, because you've been given so much. You have to be altruistic. If you're not altruistic, you don't care about people. You're bad. You want grandma to die. That is always the gaslighting that they deploy whenever you don't like the idea of paying for someone else's meals, or the subsidies that these immigrants have are absolutely horrendous. I remember in 2016 finding out that a family of two parents, two kids, they were getting $4,500 a month cash from the government. That is the epitome of taking something good, which is called reciprocity, and weaponizing it, and putting a label like altruism on it. I am all for giving without expectation of receiving. That's what market analysis is all about. That's why these conversations, I want people to invite more people here, because this is where that giving can occur. And yes, the idea of planting the seeds and seeing what sprouts, and that we foster that seed, we help that seed grow because it wants to experience life, recognizing that a lot of the seeds that we plant are not going to take root, and that's okay too. I don't want everybody to follow this solution. But the last thing we should be doing is trying to get everybody into one solution. This is a solution. One of many.
Would there be a parallel kind of thing going on with what you were talking about? I've already forgot. Algorithms, and looking at the chart from two different perspectives, and it's like dimensionality. And when you put freely given into the market, say you're in the dimension of the marketplace, freely given may be inappropriate. I don't know, maybe. But in a certain situation like nature giving oxygen, that's freely given. And we exchange. There's reciprocity. There's actual reciprocity where both people are both entities, consciousnesses are freely giving. I'm just wondering if that, because I've noticed that things like that happen, is that we have parallel discussions that have a relationship of what makes you feel. It's like when you take a broader view and you see that all these options are available and the right one feels good most of the time, because it works well, it works smoothly. There's growth and expansion. There's an in-breath and an out-breath. And anyway.
We need to get going.
Yeah, we do. Judy said she'd be here at 11:35. So I guess we'll go on. Are we going to go on Dragon Rider?
Did you send her a link? If not, then I would say we just meet in Dragon Riders. That's going to be fine.